Let's get some analysis now with Beth Kindig, who's a lead tech analyst at IO Fund, which runs tech-focused stock portfolios. And Beth, let's start off with what we've seen from Tesla. And we've seen, obviously, that investor reaction, the disappointment. How much of this do you think is to do with the fact that Elon Musk has been selling the company as so much more, right? Robo-taxis, humanoid robots. He was just tweeting about, soliciting feedback on investing in XAI as well. Does the timeline of these things being pushed out worry investors at this point?
Hey, Yvonne, absolutely. What I would say, though, is in the first 5 to 10 seconds of getting back a Tesla report, the first number I look at is automotive gross margin. That is really driving this price action. When automotive gross margin went below 20%, we saw Tesla, the lagging Mag 7 stock. This is when the stock really started to sell off. The market was expecting 16.4%, and we got 14.3%. That difference in the automotive gross margin is substantial. Tesla investors were hoping to see a bottom of sorts in the 16% range, and it has been driving the price action for the last 9 months, the negative price action, and we're seeing a similar negative reaction after hours due to that very big miss that the street was expecting.
There's also a lot of concern over FSD, right? How much further work there is and potentially even the need for a pretty major overhaul.
When it comes to full self-driving, what we've really reminded our newsletter readers is forget about these speculative business segments and really look closely at the fact that Tesla is a Fed-driven stock. It is interest rates that are putting pressure on this company. They had to subsidize financing to the tune of that lower gross margin. So we also saw evidence of that when the deliveries came in quarter over quarter growth, but production was the lowest we've seen in 7 quarters. It's all of these little clues that Tesla, as big of a company it may be in the future, today is very dependent on what the Fed does.
That's interesting, too, that they're so sensitive to what the Fed does. What about when it comes to China? Because it seems like, this EV market there is, I guess you could say, losing a bit of momentum. Obviously, given what the leadership and what we've seen as some of these local names have really come through. But what are some of the major headwinds for Tesla when it comes to China? And what is that demand picture going to look like?
China is a great point. I would rank China number 2. Second to those interest rates that we are seeing reflected in the automotive gross margin. BYD is selling 2 to 1 for Tesla in June. Tesla's market share went from 11% to 7%. I'm throwing a bunch of numbers at you just so we can really quantify Tesla's weakness. From my perspective, is found in those fundamentals, is found in that China weakness as well. China is a major market for Tesla. You can't underestimate China in the near term and medium term. Now, when it comes to full self-driving and some of these, AI projects, we're not seeing real revenue from that yet. Of course, we're seeing real revenue from China. So when you lose a big source of your core market, or let's say you're losing market share, those are the things investors truly care about. And I do believe that's what's driving the after hours price action.
And obviously, you mentioned about the stock performance. I mean, Tesla was one of the really laggers around the Mag 7 for much of this year until maybe just a few weeks ago, where we saw this stunning rally. I mean, what do you think? Was it really on the delivery side that the investors were more focused on, and was that the right way kind of to look at it?
Yes, Tesla was on sale. In fact, back in April, I was on your show and I said, look for an entry point. Tesla being on sale by 60% doesn't happen very often. Ultimately, though, the market got a little bit ahead of itself. There was quarter over quarter delivery growth, but they weren't paying close enough. They weren't paying a close enough attention to average sales price and these subsidies that are dragging on that margin. They didn't wait for all of the information to come out. And again, that first clue is that production was quite weak, so that they could move through that inventory. And it does go back to the fact that those average sales prices and having to finance is dragging on this stock.
Also, I'm wondering how the politics really impact the stock too, Beth, because it's interesting that, as soon as we heard that Trump was shot, Elon Musk was quick to endorse the former president, even though maybe some of the former president's policies are, could run against Tesla as an EV company. Do you think the politics could likely lead to a little bit more, disruption around the stock too as we get closer to this election?
What I would point to, and obviously the political landscape is changing almost daily with some of the announcements we've seen recently. What I would point to is that Tesla sold off 60%, many months ago, and it really was aligned with when it went under 20% automotive gross margin. And I don't envy Elon Musk for having to walk a fine line between the political situation right now. But I would go back to, if we can see the Fed lower rates, if we can see that automotive gross margin bottom, this stock is a buy at that time.
Beth, I wanted to get your views on some of the other. Obviously, we've got 2 down, 5 to go. Alphabet was quite a mixed bag, right? On the one hand, we had so much strength in cloud, and I suppose that really lends itself to some pretty high expectations being set up for AWS and Azure as well. But what did you make of the rest of the numbers?
I think it really does go back to Google Cloud. There was a slight acceleration. I think the market wanted to see more. We've seen that quarter over quarter acceleration across the big three, AWS, Azure, Google Cloud. And it's tied in investors' minds to the idea that you spent all of this CapEx. Now we're seeing that quarter over quarter acceleration. But was it enough for Alphabet to justify the amount of CapEx they've been spending? And that is the tone going into the rest of these earnings reports, which is, you've spent a lot on AI. Where is the return? When can we expect it?
And to that end, I'd really like to hear some of your expectations when it comes to some of these other names. Obviously, AI will be core, China will be core, right? For the likes of Apple, certainly as well. Where do you see the winners and losers as we get through the rest of the season?
For us, it really is one earnings report at a time right now. I love what Google said today on their earnings report, which is that the risk of underinvesting in AI is dramatically greater than the risk of overinvesting, meaning we're not going to see any slowdown from any of these big tech companies on spending on AI. If I were to guess, the best report will be Microsoft. And that's because the AI buyers, the people who are spending to buy AI today, are primarily enterprise. Google, Meta will, of course, use AI to increase, ROI on their own products for advertisers. But Microsoft has the best potential for reporting a nice beat or what the market wants to see on ROI, because enterprises are going to be the first buyers of AI.
Beth, I got to get your take on some of these tech sell-offs that we've seen and some of these big names of late, right? Everyone's talking about this rotation trade. Do you think earnings are going to support that rotation trade or actually hurt it?
I think earnings will support the rotation trade. Mag 7 has carried this market for a very long time. I've been in tech long enough to know when there's gains like that, people take the gains, rotate, find something that's undervalued. And now is a good time to look for those that are undervalued. We have certainly been doing that ourselves.
What's undervalued in your eyes right now?
We like we do like small caps. We like AI semiconductors that are lesser known. We've talked, I believe, on your show about liquid cooling and AI PCs. That's the next wave of AI that hasn't been priced in yet. We like those stocks quite a bit compared to something that is fully valued, such as Microsoft, Alphabet, et cetera.
Beth, it's great to have you back. Beth Kindig there, lead tech analyst at IO Fund. Of course, as we were talking about, the rest of the Mag 7 are reporting earnings over the next few weeks. We have Microsoft and Meta next week, Apple and Amazon shortly after, and it really all just culminates with NVIDIA, which is out with earnings at the end of August.